That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually, you know what? We're at the beach. Don't answer that. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
I really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh,
We got the mobile version now, remember that?
that's right. Edgefinder
Yeah,
Mobile.
yeah. That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually? Man, Frank, we finally made it down to the beach this year. What do you think?
I think this is a really great setup.
No, Frank, we're at the beach. We came all the way down here. What are you doing on your phone?
But check this out. It's a really great setup on gold right here.
Our Edgefinder summer sale is now live. Get 50% off all of our tools like commitment of traders data, economic data, and our top setups algorithm for 50+% off using the link being dropped in the chat right now or the description down below. Don't miss it. This is our biggest sale of the entire year.
All right, guys. I am tuning in here from a different place than usual today. We're here in Maine. I'm actually here with my cousins. We're hanging out for the 4th of July. Hopefully you guys can hear me and everything is okay. Again, I'm operating off of a laptop and off of my AirPods today, so it's not the usual setup, but we had to join for today because, of course, we have NFP today. Huge news in the market today. Can you guys just do me a quick favor on the uh, live chat side? Just let me know if the stream looks and sounds okay. I'd really appreciate it just because I'm also on one screen. So I have my StreamYard, my streaming software on another one. So just let me know if we're good, if we sound okay. All right, everything good. Okay, cool. Guys, we've got a couple things to talk about here as we get closer to jobs data. In terms of what we're looking at today, let me go ahead and just zoom in a little bit here. So today we've got unemployment data coming out. We've got NFP coming out, which is, of course, jobs added or not. We're expecting a lower number than previously. We're expecting 191,000 jobs today, which is interesting because if you get higher or lower than that, obviously it's going to move the markets. And this week, I guess another thing that to add to this week that makes it really important is the PMIs that came in really light this week. We see gold moving higher. We see the dollar having a really tough week. And this kind of makes sense when you understand that, well, you look at the full picture and you say, well, economic data seems to be slowing in the US. And, the question today is all coming down to jobs. But if we take a look at jobs data for a second, we can see JOLTS came in this week, not particularly impressive, but what really was a little concerning for the US story was this one right here. Take a look at services PMI. Now, services PMI, what is that for a second? Well, the services PMI is the services sector, the side of our economy that is focused on, services, which is a huge component of the U.S. economy. Well, in the last couple ones, we've seen above the 50 mark, which shows growth, right? Growth has existed in the services side of our economy. Well, we saw that analysts were forecasting for a 52.6 read on the services PMI. And instead, for the first time in a minute here, we actually got a much lower than expected services PMI, which is outlook for the economy in the services side, because this is the Purchasing Managers Index. These are all of the people who are making hiring decisions and purchasing decisions within services companies. And if they're projecting into the future that they see a decline coming or a slowdown coming in their activities, that's a leading indicator in many ways to what the US economy might look like in the future. So we get this number and the market just absolutely reacts to it, right? The dollar was down. We see gold shooting higher off of economic slowdown concerns, as well as perhaps rate cuts more likely to happen this year off of this data. And that's following another one that was key earlier this week, which was the manufacturing PMI. So manufacturing and services are both below the 50 mark, showing some material slowdown in the forecast for the economy. So when you look at that, you say, okay, we've got slowdown in the economy. We've got inflation on the producer price index and core PCE numbers coming in much better. They're coming in much lower. It looks like the Fed may start to cut rates, and that's what the market is saying. And we see that in the price of the dollar, right? The dollar declining. We see gold going up. We see at the same time yields coming down. So you've got this story where overall, it looks like the Fed is more likely to cut than not now in 2024. So certain areas of the market are definitely reacting. We see the Nasdaq continuing to push higher. This makes sense because, of course, a lot of technology, the IPO market, the borrowing costs are higher for companies that are trying to grow much bigger and require borrowing costs. So we've also seen the Russell still kind of go sideways because there's a caveat to all of this. For the Russell, for certain companies, especially sensitive companies to the economy like the Russell, which are smaller companies, they need to see not only inflation cooling but growth stays strong. And this does flag some concerns about growth because, again, the perfect soft landing is you see just a very modest, kind of cooling of the economy in line with cooling inflation. So today's figure that we're about to see the NFP number, the jobs data, is really, really important because if you want to see inflation continue to progress, you want the jobs data to come in cooler than expected, right? We were expecting 191,000 jobs. You're expecting some cooling there. If you get that, then the market will celebrate. But the concern here for me is that if jobs data comes in really cool, by the way, we've got 8 minutes to go on that. You have to be really cautious with this because if jobs data shows signs of cooling, it could, kind of become more of a landslide, right? That's the thing about this stuff is that if the jobs data starts coming in really cool, it could really kind of snowball into a bigger problem. And yes, you may see inflation come down, but you may see the jobs data start to come in really weak. And so we'll see. But again, this week we've seen a lot of cooler than anticipated economic data. It's dragged the dollar lower. I personally kind of find myself still very interested in staying long gold. This is my biggest position at this time. I'm long gold and I'm long technology through XLK and XLE. So a couple positions for me. I have energy open, I have technology open, and I have gold open. These are my current kind of allocations in my account. And so my thought process on this with gold is that if you're getting economic slowdown and inflation cooling, that's a really good environment for gold. I like that story. If you get the economy reaccelerating or staying strong and inflation really cooling, gold will still do okay because you could probably still see the rate cut situations. But you really, for gold to do really well, you probably want to see rate cuts out of kind of a panic, if you will, which I'm not saying I want that to happen, but it's something that I think could happen. I think the Fed is being very, data dependent. They're waiting for something to show signs of breaking. As much as they say they are not waiting for that, I personally think that they kind of are, right? They're waiting for some more data, but what that might mean is that them waiting for more data is waiting for something to start to show, red flags on the other side, on the economic growth side, on the job side, et cetera. So something to think about. Anyways, lots of stuff we can get into. We've got about 7 minutes to go here. Hopefully things are looking okay still on the live stream. Again, I can't see my streaming end. So in fact, I'm going to go ahead and just open my Discord here on my phone. James or Chandler, if you guys have anything, I will keep my Discord open for feedback. But I think we're good. So all good, James says. All right, cool. So S&P 500 is still chugging higher. I mean, I don't know if anybody is surprised at this point. This thing has been a rocket ship for some time. While I don't have any VOO anymore, I got called away from my my shares on the S&P 500. I am still long XLK, which XLK is the technology sector fund, and I've been long this one since this pullback in April. I think this has room, as much as it might sound crazy. I mean, if we get rate cuts, I think that even if we do see that souring situation where the economy starts to really slow and that's what causes rate cuts, I think we're not there yet, right? We still are seeing data coming in cool, but we've got jobs data in a couple minutes, which is going to be really important. And at the same time, we've also got, um, you've got the economy still at a place where it's not in a crashing situation. Again, PMI is coming in slightly lower than 50 is actually a perfectly fine scenario. But if we see this continue to come down lower, like if PMI has come down into the lower 40s, then you probably have a problem. You probably have a serious concern about recession start to flare up. And the question is, are we going to kind of walk that fine line of cooling data but not crashing data, or is it going to dip into maybe inflation hurts the consumer a little bit too much and spending really comes out poor, and perhaps like the retail sales, right, the retail level spending, we've seen that kind of pattern starting to emerge where the kind of thumb on the pulse of the consumer has been off. We've seen cooler than anticipated retail sales. In fact, they even revised the previous one lower. So the consumer seems to be starting to feel a little tapped out. Who can blame them? Everything in the grocery store is so expensive, right? So I think that is starting to kind of come to roost. But we have gold here. I'm still long gold. I haven't touched my position at all. I am looking to trail a stop loss if we do see prices move higher today off of a cooler than anticipated jobs figure. Just to break this down, if you're watching gold, I know a lot of my audience is super gold focused. If you get something where the jobs data comes in very, very strong today, if it's a surprise to the upside, then gold could very easily kind of make a retracement move. But even in that case, there's been a lot of evidence this week to me that tells me, okay, you're kind of on the right track with slowing economic data is generally happening. So I want to stay long gold. So even if jobs data comes in a little strong today, you will probably see a drop on gold if that happens. But I still kind of remain convicted. So I have my, I could be completely wrong. I always mention this because I'm not a crystal ball owner. If anybody has a crystal ball, please hit me up. My YouTube channel. But if, for in terms of context for what I'm going to actually be doing with my position, the answer is nothing today. So I am already long gold. I've picked it up back here. Saw a little bit of a drawdown, popped back up after hitting this 2300 level. And as long as we stay in that territory, I remain long. This is as long as we don't hit my stop, basically. So my stop is in place if something were to turn around or change. But gold is getting a very strong reading on the Edgefinder right now, and so we will keep tabs on this. But again, gold sitting at a plus 11 here on the Edgefinder is a really strong signal, and we've had some new ones popping up too. We've got NZD USD, we've got Euro USD, a lot of stuff here against the dollar. Seems like we're kind of getting the the green light on a lot of dollar bearish signals, which again, with the euro coming in higher than expected here, or not higher than expected, with with jobs data this week and PMIs coming in lower than expected, the euro has popped higher on this top setups page. So I'm keeping an eye on the euro. Some of that data has shown up in the MPMIs and PMI score. That's a lot of the change that happened on the euro dollar, which is manufacturing and services. So we'll keep an eye on that. But yeah, looking pretty strong for a couple of these charts. I do like the euro dollar. I also like the Australian dollar for the currency traders out there. Nice little breakout forming here, and then Aussie dollar. We broke this channel here that I've been watching. So if we get a pullback today, if jobs data, excuse me, if jobs data comes in a little strong and we see the Aussie dollar pull back a little bit, it's a setup I might take myself. I do have one currency trade open. I'm short USD CHF off of this level here of resistance. So I've got this trade. This is my only currency trade right now, but I've got a couple that I'm looking to potentially get into on the FX side. On the commodity side, I am long both gold and silver. As I mentioned, both of those trades are in the green. Bitcoin's going against me here. We've dropped since my entry, so I may be getting taken out of that trade here. On the NASDAQ side, again, I would love to see it just kind of keep doing its thing because I'm long tech. But if it pulls back, I may get a chance to add some positions here. We're getting really close here, guys. We got, well, we're about to get the news. So let's go ahead and see what we've got. All right. And NFPs just come out here. Okay, unemployment rate. Oh, that's CAD. Jobs data came in at 206,000 jobs for the US. Average hourly earnings came in as expected at 0.3%. So, and then we had a unemployment rate tick up at 4.1%. So far, that's definitely going to be mixed in my view. You do have the market selling off on the dollar, which is, interesting. I think it's that 4.1% that is getting the attention because jobs data came in pretty much as expected. You could see 206,000 jobs compared to a 191,000 forecast. But what's interesting here is that the unemployment rate did tick up to 4.1%. The dollar is moving lower off of this data here. Again, here is your 4-hour chart view. Very interesting to see that there. And gold now pushing back up. Look at that quick wick lower and reversal on gold. Again, an unemployment rate ticking up into the 4.1% is trending higher. I mean, that's a continued upward trend on the unemployment rate, which is going to get the Fed's attention, I think. At the same time, here's NASDAQ pushing higher on this. I think that if you actually take a look at this data and you say, well, is it a big surprise? I would say not particularly. 4.1% is a surprise, but the change in jobs was not a particularly strong surprise. A strong surprise would be like 250. Oh, and look at this. They just revised the previous numbers. Let's see, revised from 272. Oh, that's the figure right there. They revised the previous number from 272,000 jobs, which this is what Jerome Powell actually said in his speech. He mentioned that jobs data on the last one, he said, I think that might be a little bit misleading or a little bit off. And certainly it actually came in lower now. They revised the previous month's jobs data from 272,000 jobs down to 218. So now we've got a picture that is actually straight up dollar weak. Because now that just makes sense. Now you've got revisions lower. So if you actually look at jobs data is coming in really light now. Not only did you have a JOLTS jobs numbers that came in, this week, but you also had PMIs weaker. You have now, again, revisions lower. That's a significant revisions lower, and unemployment rate ticking higher. Average hourly earnings aren't here to save the day in terms of the US dollar either, because again, 0.3% is kind of a much more appropriate figure. That's probably causing gold to fly. Look at that. There's gold. This is fantastic for gold bulls out there. Congrats if you're on that side of the trade. We got silver flying up too, which is great. And again, the dollar coming down, continuing to come down, breaking support here off the daily chart. We'll see if that can hold. But again, this is a figure that the bears are going to like. So I'm definitely kind of glad to see this coming in line. I'm also long PLT, which is probably up today as well. So nice. And then Bitcoin all over the place in reaction to this. The euro is pushing higher here. So although I may not get my entry on that one right now, congrats to Euro bulls. Pretty much dollar bearishness across the board is working out today here. Gold up 0.6% on the day. You've got the dollar index continuing to push lower here. So we'll have to see how that goes. But wow, what a jobs data point. Also, again, validating a lot of the setups here today, I think on the Edgefinder, we have gold bulls, bullish setups, euro dollar, SPX500, Kiwi dollar, pound USD, the US 10-year treasury bonds, which I'm long TLT. So you've got lots of different bullish readings that are working out well right now. By the way, guys, we're going to do something real quick here. If you are just tuning in, I wanted to make an announcement that today is our last day of the Edgefinder sale. If you're somebody who watches my streams on a regular basis and you don't already have a copy of this, again, it is currently 50% off. But for stream viewers right now, because it is the last day and we've got people here with us live, we're actually going to be doing 55% off just for a limited period of time. Again, this is ending today, so this is the last day of the sale. If you'd like to get access to our tool and you'd like some pricing details, you'd like some information about it, or you have some questions about the tool, here's how you can get access to this, tap into the sale before it ends. We just dropped a link here. James helped me out with that. He's got it in the chat here for you guys. So if you would like to get more information about the Edgefinder, or you'd like to go ahead and pick up a copy while this sale is going on, this is the tool that I use personally every single day. My team has built this from the start. We've been working on this thing for a couple years now. And basically what it does is it lets you look at a ton of economic data, a ton of sentiment data, like the commitment of traders data, right? You can pull up this commitment of traders report stuff. So if I pull this in here, I can pull up the COT report and see what institutional money is on a week-to-week basis, what they're doing, you know, buys and sells and things like that. At the same time, we've got seasonality, so you can pull up, you know, month of the year trends, things that typically happen on different months of the year. You have GDP stats, you have services PMI, manufacturing PMI. Today, what would be really important is like your NFP charts, right? So if you want to look at, you know, what NFP has been over history and see, you know, how that impacts the charts. At the same time, you have unemployment claims, which like we got yesterday, which unemployment claims, by the way, have been trending higher. You've got JOLTS jobs numbers, which I referenced earlier as well, and the unemployment rate, which actually ticked back up now to the 4.1% level. This continues to trend higher. We are seeing jobs data materially slow. The question is, where does that stop? And that's the big thing for me, where I'm like, okay, I like the story for gold longs because I don't know where that data slows, but the momentum seems to be economic data is slowing. When are they going to start cutting rates? And are they going to cut rates one time, or are they going to cut rates twice this year? We'll see. I mean, if they cut rates twice this year, which very well may be the case with this data here this week, it is possible that 2 rate cuts could happen this year, that you might see one in September, one in November. And if that happens, again, rate sensitive stuff like gold, TLT, technology, you know, discretionary, as long as the economy is not falling apart, could go higher. But even if the economy is falling apart, gold would likely do pretty decently well in that situation. That's why I personally I like it long, and that's why I've been long for, you know, most of this year. It's kind of been my top pick, which has not been the perfect pick. I mean, obviously, in hindsight, shoulda, coulda, woulda just bought technology only, right? I do have a piece of my portfolio that is long tech, but in hindsight, right, Nasdaq just would have been the play of the year. Anyways, like I said, it is currently our biggest discount of the year that is ending here today. We are doing this Friday. This is our 55% off last chance call. So if you haven't picked up a copy and you would like to get one, take advantage. Click the link being dropped in the chat one more time here for you, and you can get yourself a copy of the Edgefinder. So again, it's our pride and joy. We've been working on it since 2022. And it is a everyday thing. We are constantly kind of tweaking it, improving it, and trying to do our best to make it a better system for traders looking to get into fundamentals, because it is daunting to get into fundamentals. It seems like a lot at first, but I can tell you, if you have tools in front of you, it makes it tremendously easier. So definitely take advantage. If you've ever thought about it, this is your chance. Okay, so gold still up 0.5%, has given back a little bit of those gains here. You can see kind of a nasty candle, right? Shot lower, shot higher. This would have been a tough day for like kind of putting buy stops and sell stops on both sides, which I know a lot of traders love to do that. I personally think it's really risky to do that, but you know, traders will do what they want to do. Let's take a look at oil here in reaction to this. So the jobs data came in kind of light, and oil didn't move too much off this. That's kind of what I would anticipate because jobs data being strong, you might say, well, that's good for demand, good for oil prices, but rate cuts are also good for oil prices. So I do kind of think that oil is a more bullish place for me this year as well. Commodities in general look pretty attractive, at least for now. So what else on this list? We have euro dollar. Let's go take a look at EU. So the euro might be given a little bit of a setup here. I need to start fresh on this chart because I haven't looked at the euro in a few minutes or a few days. So again, big shoot to the upside here. Let's actually do just a quick fib level from low to high here. I'm just curious where this puts us. So from this low here, this 38.2% retracement looks kind of interesting. Again, I think you might see, am I long-term bullish on the dollar? I'm sorry, on the euro? Not really, but I think that there might be just more of this, the USD might have been a little bit overestimated. A lot of people have been very bullish on the dollar, and the idea being, the US outperformance, which has been a true case. So you can't say those people were wrong. However, what we're seeing now is that the US is also subject to this inflation story. They're also feeling the hurt. You're starting to see some slowdown in the US economy as well as other places. So I think that could lead to kind of a repricing and maybe not so much domination of the dollar here for the rest of this year if we start to see the Fed rate cut. We also have an election this year as well. That is another reason that I keep talking about with my bullishness on metals and stocks. An election year, I think, is good for both because I've made the case, my conspiracy, if you will, has been that Fed officials who want to, look good to keep their jobs may be a little bit more inclined to cut rates. As much as they would never admit that or never say that, I don't think they even have to think that. They just might feel a little more inclined, considering it is an election year and, they're appointed to their positions. So it is something that is on their mind as a human being, right? I would do the same thing. Okay. So we've got to go for a little bit longer. We got 19 minutes or so to go here on this stream before we pass it on to the next guest on the A1 Trading Show. If you're enjoying the show, do me a big favor, help us out. Hit that thumbs up button on the stream. Again, I'm in Maine this weekend I'm with my family, my cousins. We're up in Maine. They have a beautiful home here, and we're hanging out on the water. And yesterday we did something I'd never done before. We went out to a beach across the way with a kayak and a canoe, and we dug up some clams off the beach, and we're frying them today. So it's going to be fun. Anyways, happy 4th of July for anybody who is watching from the US. Hopefully you had a fun night last night. Not too much fun. Otherwise I wouldn't be here. But no, we did have a good time. We did a bonfire. We did that last night. I mean, it was great. So, and Maine is absolutely beautiful. For people who have not been, Maine is, or if you're outside the U.S., it's the very top northeastern part of the United States, and it is a beautiful state. Sounds like a lot of fun. Enjoy yourself, Nick. Thank you. Yes, it was so fun. Well, it's been so fun. We got more stuff to do here. Anyways, let's take an updated look at the dollar index. So the dollar index here on a 1-hour chart did shoot lower here off this data. And again, I think that this data continues to sort of support the idea for a weaker dollar, simply because, again, you take a look at the full picture this week. And let's just do this really quick together. So we had services PMIs came in light. Manufacturing PMIs came in light. In fact, let me see if I can just make this bigger for everyone to be able to see a little bit easier. So if you have that, and then you had jobless claims came in higher than expected. So that's another sort of bearish thing for the dollar, right? More people filing unemployment. And then you had jolts, which jolts I think were mixed, right? Let's just call them mixed because I could be wrong about that. But somebody correct me. I think jolts came in. Well, you know what? We have data. Let's just use data. Let's go to our labor data, job openings. So let's have a look at JOLTS. So forecast was for 7.96 million. We got slightly better. So we could say that that actually was, let's give that. So JOLTS were actually better than anticipated. So slightly better. So we got services PMI, PMI numbers this week came in light. Jobless claims came in not as good. I mean, you've got a picture here where there's a trend in the economic data for slowdown, and that trend is going to lead the Fed to, okay, we may see rate cuts. In fact, what we're going to do now, let's take a look at the Fed Watch tool together. And guys, I do apologize for the lower than usual stream quality. I am aware it doesn't have the same microphone effect and all the lighting and all the good stuff. So thanks for bearing with me. But I am, again, like I said, in Maine with my family. So just wanted to make sure I showed face for this really important live stream here. And also, we're working remote anyways today, just because yesterday was the 4th. Anyways, so you had July expectations still only about a 6.7% chance. But what about September? September is now pricing in, guys, almost an 80% chance that we're going to see our first rate cut by September. September's meeting is the 18th. And if we get our first rate cut in September, I mean, if we keep seeing stuff trend the way we're seeing it recently, there's a very solid chance we see 2 rate cuts. Is it, guaranteed? No, of course not. But the idea, okay, so 18th of December, the expectation for us to have not rate cut is at only at 3%. So a very solid chance now that we're going to see at least 1 rate cut this year. But there's even a probability now showing up here that we are going to get 2 rate cuts by the end of the year, which changes things. And is also why, again, you've got things like gold moving higher, commodities moving higher, and the stock market moving higher because they're excited about rate cut prospects as well. So I think you do have a case here for rate cuts to come into the picture, because if the Fed does not cut interest rates, if they keep seeing data like this and they don't cut interest rates, the problem is what that could lead to is not only rate cuts starting to, inflation starts to come down. That's great, but you might see this momentum pick up in economic slowdown, which is not what the Fed wants either. So the Fed is kind of between a rock and a hard place, right? It's kind of a tricky spot. Also, I believe we have Kenzo here standing by, so maybe we can bring him in. I can't see Kenzo, but if you bring him in and say hello, actually, I don't know if he's in here or not. Kenzo, if you are, I apologize, I have no vision. Real quick, let's just run a quick break before we get set up with Kenzo, and then we'll speak with him for just a few minutes. So coming back right after this.
Our summer software sale is happening right now, which means you can get the Edgefinder for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edgefinder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edgefinder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
That is a fantastic advertisement, James. I love the surfing. Also, again, like James was mentioning, our discount for 55% off is ending soon. So make sure use that link. We just dropped it in the chat there for you. And now we're joined with Mr. Kenzo. I can see you now. I'm going to let you keep the screen so that I've only got one screen today because I'm on my laptop. So first of all, most important thing here today.
Oh, okay.
I love this hat.
Thank you, thank you, man.
Yeah, so Kenzo, we had jobs data come in a little bit lighter. Now, the actual NFP, the actual print came in about as expected for the actual number for June. However, the revisions lower really changed the picture pretty quick. Suddenly, you had a revisions down from the month of May, down by I think it was like by 50,000 jobs or 60,000 jobs. So what we see is cool data on the jobs front, and that's following a week where we've had cool data. We've seen PMIs come in lighter, both in the services and the manufacturing section. I mean, Kenzo, the last time I spoke with you, you were talking about the dollar, and you were talking about how it looks a little bit top heavy, and it seems like you might have been right about that. Do you think the dollar has more room to the downside here?
Yes, you're right. With the economic news that we received already, most of them, or let's say 80% of them, they're all pointing down, which is good. It's actually good. So now, just because we are on a new month, it's like we just have to know what's new with the maybe CPI and retail sales. But for now, or until now, I'm confident that maybe we will see a continuation of that sell, even though at the moment I think this area might look like actually a nice support. But I think maybe the market might reach this level. From there, I think maybe we will actually have to decide if are we going to get a breakout or maybe the market will reverse. But at the moment, things don't really look good for the dollar, and that is good for the rates. I think maybe they will change their tone with the rates cuts. Maybe they will add a second, or let's say twice. Maybe they will cut twice, because at the moment they promised one. Maybe they will change their tone, and if they do that, we will see some very nice moves from Nasdaq, gold, and US status.
Yeah, and the thing is, Kenzo, I think that you might be right about that, because the last time Jerome Powell spoke, he seemed he came out pretty dovish. The market actually rallied just on the antics of Jerome Powell last week, or actually was that this week? I'm losing track of time. But the last time he spoke, at that ECB panel, he sounded pretty confident that the Fed had really made substantial progress on both of their mandates, which maybe preceded a little bit of what we've gotten this week, which has been slowdown in PMI data, not crashing but cooling, and at the same time you've got a pretty good case to be made, like you said, for a second rate cut to be pictured into this year. And if that happens, as you mentioned, a lot of these parts of the market that have been very much waiting for rate cuts, like perhaps real estate, perhaps technology's not really even waited for anything because it's just ripped higher anyways. But maybe it will give some extra confirmation to things like the Nasdaq, et cetera, that are a little bit more rate sensitive with their higher exposure to technology. And then you also have the idea that the dollar weakening. For a little bit there, it looked like the dollar was just going to be strong because of its outperformance to other economies, which it may still outperform, but maybe at a much narrower kind of basis. But you mentioned gold, you mentioned the Nasdaq. What are your thoughts on gold?
Yeah, I think gold, since we had a very cool event, or let's say mixed, it's not really that bad. So let me see. On a 4 hours time frame, it seems like the market is still trying to go even higher. So let me zoom that a little bit. So I had this structure. So now we also have a smaller area there. So I think if the market gets out of that, we will see a nice push to the upside. This gives us a very nice room to look for a continuation of that buy. Plus, as long as the market respected our support area, I think we did talk about that last week, where the market was respecting that. We were expecting to see a very nice bullish move. Yes, if it goes up, the only level that I will be expecting to see a nice reversal, maybe it will be at that top resistance on top there. But at the moment, to me, I think we have enough room to see a continuation of that buy. Everything that we saw, most of all these major events, they are cooling off like aggressively. So this month might be worse.
Yeah, no, I definitely agree with you. I think that the path of least resistance for gold, at least right now, is to go back and retest those highs unless something changes. But you've had just a string of kind of proof, I guess, if you will, for gold bullishness recently. PMI data coming in light like that is a real sign that forward-looking indicators are showing slowdown in the economy. That's bullish for gold by itself. But you couple that with the
Mm.
ideas of rate cuts, as you mentioned, perhaps two now being. Actually, I just did the Fed Watch tool, Kenzo, and it actually did show probabilities are now have just swung to slightly favoring two rate cuts by end of year, December 18th. So thought that was really
Wow,
interesting. And yeah, so we're
that's
looking
good.
at a potential rate cut. So yeah, and next one I wanted to ask you about is you mentioned the Nasdaq. Do you have any positions on the Nasdaq, or are you watching for a setup?
I was waiting for the news, but already we had actually a pending order ready there. So obviously, maybe once the market opens, it's where we will see maybe the market trying to go up. So this shows the strength of the tech stock. We just received NFP, and we see that there's nothing any aggressive move. So that is actually positive. Already we have a bullish momentum on the stocks. So I'm expecting to see a very good Friday. I think it's gonna go higher maybe later on.
Yeah, it's been so strong. Technology has just, obviously led this whole year really. And I think
Mm.
that with the prospect of rate cuts, Kenzo, I'm my personal exposure in terms of sectors, I have long positions on energy and on technology. And technology is a weird one because it's the only one that's really performing, but it can continue to be the one that performs the best because I would make the case that if you're going to see rate cuts, and the next conversation might start to be, well, how much are we going to see the economy cool down? In that scenario, I
Mm.
still like the tech story simply because they have the cash reserves, those big companies, Google's and Meta's and Amazon. It's hard to poke an argument against how strong their balance sheets are, how solid
Mm.
their
Mm.
cash flows are. If we see an economic slowdown, it's almost like, do you even want to abandon the big mega tech trade? I think that for me personally, the answer would be no. I still think those are the best kinds of companies, even if you see a downturn, to be long those sorts of companies for the longer term. Um,
Mm.
as barring we have a straight up, kind of 2008 type recession, the overall story for those companies is just easier to get behind. Now, the challenging part, I suppose, is that they are priced very, very richly. Um, to
Mm.
Because everyone knows that, right? They're the safe companies, but at the same time, even the safe companies can get overvalued. So I don't know. It's an interesting one. If you were to, just out of curiosity, if you were to take a position in the Nasdaq, the Dow, or the S&P, which one would you like hold for 12 months from now? I'm just curious.
I think I will actually go with tech stock.
Mm,
Currently, you see sometimes things, let's say interest rates actually they are still higher. And maybe we can compare with few years ago, let's say 2008 and stuff, where maybe we saw some of the tech stock were going down. But this time, I think there are positioned differently because that time and now they have a like seriously good balance sheet. They have like hard cash. Everything is better than before. Tech is now adapted like unlike before, so for them just to crash like that, I don't think that will happen, even if they don't cut the rates. So there is a room for cushion. So I think I can just buy and hold for more than 12 months. I think we're still gonna we're still gonna see some very nice highs.
mm. Yeah, no, until you see something really introduced, here's the one thing that I've talked about, Kenzo, in the past that I think is, you know, it's like a tornado watch, if you will, which is if you get the Fed to cut interest rates and then the economy like kind of steamrolls ahead and we actually see inflation reaccelerate, if you start seeing signs that the Fed is battling inflation for round two, then we might see a bear market. We may see some serious corrections. But right now, it's kind of just like smooth sailing until it's not. Like I think that, as traders, as investors, for me on the trading side, it's like I don't want to try and anticipate a bear market. I want to, kind of when that comes, which it will come, uh, be prepared for what could happen. But in the meantime, stocks are strong. The companies are looking good, and as long as you don't get further acceleration on the economic decline side, I still like the
Mm.
story. Um, we'll see where that goes, but we will just have to kind of see what else are you watching in the markets right now.
I was actually also watching some of the currency pairs. We saw GBP USD. It was like seriously pushing higher. And the moves here were a bit confusing because we were just coming out of this downtrend structure, but it seems like now the market will be going higher. So, and this NFP did not even try to move the market. So at the moment, it seems like every pair agrees with us to say, you know what, the dollar, it's losing some momentum quite slower. So maybe we'll end up seeing a breakout of that structure, maybe seeing a continuation of a buy. Even on the, like, let's say USD JPY, we know that very well that JPY is quite weak, but we saw a US trying to reverse. So that showed us that actually USD, it was indeed losing some momentum, even though now it's trying to reverse again. I think this reversal can still continue. Yes, the overall structure, it is still that bullish move, but I still believe that maybe we will see a nice reversal to reach that level. So this is other things that shows us that, yeah, dollar, it's losing momentum on both sides. It's not only on certain pairs. So yeah, on currency pairs, I was just looking at this few. So mostly I was actually on gold, Nasdaq, and S&P. S&P 500 at the moment is just the same as Nasdaq 100.
Sure. Well, yeah, no, I think it's going to be interesting to see if that dollar yen can finally get a little bit of a relief pullback. It's been such a dominant uptrend recently, just with the Bank of Japan really struggling with their growth story. And again, the dollar has been really strong. So perhaps this round of data may give a little bit of a chance for the dollar yen to catch its breath, if you will. But yeah. So Kenzo, if you're cool with it, I'm gonna give you a little bit of time here to just take over the show and walk through some charts that you'd like to. Before I step out of the room, let me just mention to everybody watching that Kenzo's got his own YouTube channel. We've got it commented here right now. So if you're not already following Kenzo, his channel is Extra Hot Forex. So make sure it is totally free value for sure to go check out Kenzo's channel. So make sure to go subscribe. And Kenzo, you've got the show for a little bit. Thank you very much for coming on today.
Thank you very much. So yeah, guys, on the comment section, as you know, as always, let me know which pairs do you want me to check. But I will start with DXY as we are already going to talk about the dollar. So as the market is not really opened yet, on my daily time frame here on dollar index, just to understand what's the strength of the dollar at the moment, we can see that the market is actually slowly going down, and the question is, will we break this support area? And maybe we also have a horizontal structure there before maybe we see a bounce back, or maybe the market will end up breaking out. At the moment, we don't really care. We can easily see that the market is going down, which means that it's actually good for us. It's way, way too good for us, because now we can buy easily the pairs that are going against the dollar. So the market shows the weakness there. But since the market is not really open yet, the market might not really move that much. We might see that in few minutes, let's say 27 minutes, once the market opens, maybe we will see some very nice moves. But at the moment, we can easily see that we have like 1, 2, 3, 4 days straight. 4 days straight, the market has been trying to go even lower. So I see someone said, check Euro, CAD, gold. I will go straight to that. So, but at the moment, let me see what's happening on gold. So on gold, let me just use 4 hours time frame. So on gold here, we can easily see that, you know what, the market has been playing around this area for several times. And at the end of the day, we start to see that the market gave us a nice white structure. The market was actually going down, something like that. Do you see that? So now the market just broke out of that structure. This means that the market is no longer under this pressure. Obviously, the market will be breaking out and starting to go to the upside. And already the market is doing that. Do you see that? The market shows us that it's ready to go even higher. And I think if it does, we will see maybe the market reaching that level around 2,440, way higher. So if maybe we buy around this level, that can be a very nice area for us to try to reach. So GBP USD, let's try GBP USD. So on GBP USD, this is what we have, by the way. We can see that the market actually, we are coming from a very nice structure that it was actually a downtrend structure. Do you see that? So we are coming from a very nice downtrend structure. After that, this was a very nice one. You can see the market was moving very nice. After we had that breakout, we were expecting to see a proper move, like something like that. But what we saw there, it was a mess. Why? Because we had some geopolitics, we had some economic news here and there, and they mess up our chart, you see. But what I like here is the market did actually reach this area where the market broke out and respected that level. So at the moment, I'm waiting for the market to either break this level of a resistance, or maybe the market will be trying to reverse. Do you see that? So, but the overall picture here, we were expecting to see a very nice bullish move, but the market actually did not really continue with that. Just look at that. The market was going up, going down, break out. So now the question is, which structure are we supposed to follow? So we just have to clear everything and say, you know what? We have a common resistance there that we can say we had some areas touching that level. So we can use that to say, if the market breaks out of that, we can continue buying, or maybe the market might just play around here. Maybe we will see another reversal like that one. Maybe it will happen there. Do you see that? So let's push to the next one. Let me see. USD CAD. Let me check USD CAD. USD CAD. Let's see that. I will be checking your comments, guys. I will be checking your comments. USD CAD. USD CAD, we show it was breaking out of that support area. Let's see. Okay. So yeah, this is what we have actually. The market was actually, we can still say the market is still on that nice uptrend structure, and we had a nice breakout. We had a nice breakout there. I think this structure is quite visible, very nice on a daily time frame structure. So we had a very nice bullish move until we had this breakout here. Do you see that? So the market broke out, but when we check, we also have another horizontal structure that we can use as a potential support, even though the market already broke out of that diagonal structure. So now for us to look for a sell, it means we have to wait for the market to break out of this support area, horizontal one, because we already broke out of that diagonal structure. So if it breaks that, we can say, yeah, it's time for us to look for that sell. Or maybe the market will then continue with our uptrend structure. So if it continues going up, that will mean that it's actually a very nice diagonal. It's a very nice adjustment. So the market just break out just to adjust that overall trend, and it might continue going higher like that. So let's check other pairs. Let's see. USD CAD, Euro CAD. I will check Euro CAD. Okay, let me check Euro CAD. It's like everyone is looking for Euro CAD. Euro Canada. Did I add Euro CAD? Okay, yeah, it's here. So Europe, Canada. So this is what we have, by the way, on Euro Canada. The market was actually on a very nice uptrend structure, but it seems like the market tried to break out of that structure. But I think we also have a nice area here that we can call a very nice horizontal structure. So it means we are going to look for this adjustment, because it's not really a fake breakout, because it still makes sense with our previous structures. So maybe the market was just adjusting here and it will be continuing like that. But if you check previously, yes, it was making sense to continue with that trend. But since we have a breakout, it means our trend here, it doesn't really make sense anymore. So which means this is going to be the structure that we have from now on. So on top there, we can have our resistance area. You can see that the market is moving like this. If you miss this area, obviously you just need to wait for a proper reversal before we continue going even higher. But at the moment, I think we are far from our support area. Wait for the market to give you something, then we can jump on that. At the moment, I think we are in the middle of this support and resistance, and they are like seriously far from each other. So which means we just have to wait and relax. Unless if maybe you're looking at this on a way too smaller time frame. Let's go maybe on 4 hour time frame, where we're going to see a nice trend like that, but those are going to be short ones. And once the market continues here, it means you're going to have a nice smaller uptrend. But obviously, you should apply your strategy. But with on my side, this to me, I have to just look on a bigger picture, because if I look at the smaller structures, they will end up confusing. So on my side, I was just going with a structure like that. So I was not looking at structures like that. I hope you see that. So let me try to check the other one. Euro USD, US 30, NAS 100, GBP, JPY, German 40, AJ. Okay. Let me try to check all those. I see US 30, I see NASDAQ. I will just start with any, guys. I will start with any pair that I see here. US 30, what's really happening on US 30? If you check here, we are actually coming from this nice consolidation structure. The market has been consolidating around this level, and likely enough, we're able to break that level. So where we are, the market is still consolidating again. You can see what's really happening there. So at the moment, we can't do anything here. So we're just waiting for the market to touch our support area before going up, or maybe the market will end up breaking out of that resistance structure. Then we can continue going higher. Maybe at the end of the day, we might have something like that also. But even our horizontal structures, they also work very nice at the moment. So maybe the market will break and we will jump on that. But at the moment, I think it will be a very good idea just to wait and see if maybe the market will be breaking out or maybe retesting. But if the market is just playing around or between our support and resistance, I don't think we need to act. The market is just not, it's not going anywhere. So that will be just a waste of time. So now we are on NASDAQ. So if we check the time, the structure here, the market has been going up for quite some time, guys. I think this is actually a good news. It shows us that slowly inflation is going down. So I'm expecting to see a very nice push to the upside. A continuation of this buy, I think, is going to be a very nice one. So if we go closer, you will see that we had a very nice resistance structure. Let me remove that. If you check, we have a very nice resistance structure, and the market was able to break out of that. So I'm expecting to see a very nice push to the upside, especially when NFP, it's not really aggressively bullish. So actually, it's not really bullish. We can say it was not really good, and that it's good for our stocks or indices, right? So I'm expecting to see a continuation of that buy. As you can see that we were just ranging, we just broke out of that. So we'll be expecting a continuation of that buy. Plus the overall structure, it's actually a very nice uptrend. So most likely, as you know, you don't really have to go against the trend As long as you understand what you're doing, but as long as you don't you don't go against the trend, that can actually work in your favor. So let me check the other one, GBP, JPY, German 40. German. I saw German, it was aggressively bullish, guys. I did not really understand why. Maybe there was some news or maybe earnings, anything that made it to push higher. Obviously, there must be something. But the overall structure that we had before, it was a very nice downtrend structure. The market was just going down nicely like that. And guess what? We had a very nice breakout here. So the question is, will the market try to retest here and continue going higher? Or maybe will the market respect other areas that we see on our left-hand side? Something like that. Yes, it's possible. Then you can say maybe we can wait for a breakout before we see a nice push. Or maybe the market will then retest here before going higher. But at the moment, I think the market is just giving us a clue there. The market is reversing. That might be a potential resistance going further. So which means we can have something like this and say, okay, the market is just reversing around that level. And around this area, around this area is going to be where the market broke out. So now we can say we have a potential support, especially where the market broke out. The market just reversed around that. You see that? So maybe it's going to be like this, breaking out, maybe something like that. That is also possible. So let's push to the next one, GBP, JPY. Let's check GBP, JPY. GBP, JPY. Where is GBP, JPY? I don't think I have it. I will have to add that. USD, CHF, Euro, CHF. Let me go on Euro, CHF before I go on GBP, JPY. So Euro, CHF. Okay. It seems like the market is going higher. Okay. This is a very nice uptrend structure. Let me see this on a daily time frame so that you can see the structures properly. So this is what we have actually. We had a very nice bullish move, which it was actually aggressive. So we see a very nice push. Then after that, we had a nice breakout. So now it shows us that the market is going back. So the question is, will the market continue like that? It seems like the market even broke out of the area that we thought maybe it was going to be a potential resistance, but it seems like the market will just reverse. Maybe we're going to see a nice push to the upside. So that it's a very nice structure to see, but it might confuse because we were just coming out of this uptrend and we were expecting maybe the market to continue. Now the market is reversing. So with this, don't just jump on the market. Let's wait for the market to give us proper structures that we can use to look for those buy positions, as it looks like it's going to continue going up. But if it's going to reverse, then it's also fine. We're not going to jump on the market unnecessarily. We will see what will happen after. So now let's go straight to GBP, JPY. Okay, anyways, I think that is enough.
Sorry, I hate to cut you off, Kenzo. I know that you could keep going and going, and quite frankly, I think that we all love hearing your market analysis. But we do have more guests coming on the show today, so I'd like to thank you for your time, because coming up next we've got Marco. But yeah, Kenzo, have a great rest of your week, man, and we'll see you back next week.
Thank you very much, man, and also your viewers.
All right, great. Thank you. All right, guys, we're going to run a really quick break here, and then we're going to be right back with Marco. So don't go anywhere. We're going to be right back. Attention A1 Trading Show fans. If you're interested in getting free access to the Edgefinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, Click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello guys, how are you doing? So let's get started with this section of the live stream. If you have any questions, make sure you put them in the chat. Again, we're going to do chart requests, we're going to do market analysis, any trade recaps that I have taken, and just a general Q&A. So if you have any questions with psychology, risk management, how to actually become consistently profitable, how long does it take, you can put all of the questions in the chat. So a quick recap of what I do is I trade only 6 currency pairs right here. And then I'm going to be analyzing the big ones that you see here on the list as well. So let's get started. Silver, NASDAQ 100. Yeah, sure. We'll definitely check those out. So today is NFP, non-farm payroll, right? As you can see with this candle right here, usually it's a big indecision candle. So in my plan, in my rules, I have that I'm not trading NFP. So basically, I stopped trading on NFP Friday at around 1 to 2 a.m. So that is when I stopped executing all setups. And I was not looking for anything right here because, again, my cutoff time was somewhere around these candles. Okay. So NFP volatility is high. The spreads expand drastically. And I have had some bad experiences where basically I got taken out for more than I initially risked. So I usually risk 1% on every single one of my positions, but I did have cases where I got slipped for 1.5, maybe even 2% on NFP Friday. So to avoid that happening, much better to not take any new positions and possibly close positions that are running near break even. Okay, so let's say you took an entry here and then NFP comes, you would want to be closing your position because look at this, huge candle, huge wick up, huge wick down, you're gonna get slipped. Okay, so let's do silver. Silver, I'm gonna do 1 hour, 4 hour, and the daily. Okay, I solely trade on the 1 hour chart, but to make it a bit more interesting, I'm gonna do an analysis on basically 3 time frames. 1 hour for me is pretty flat and range bound. Well, 4 hour in an uptrend. Okay, seeing a bullish scenario here. Now broke the high, retraced. That is a warning sign. That is not the best to see, so I would be a bit more careful. But overall, this is moving up. Not in a very explosive manner, not with a lot of momentum, but it is moving up. Daily. Well, daily is pretty interesting. So we are coming from a definite uptrend, as you can see, right? Definite uptrend. So this may just be a pullback before the price decides to continue up like this. Okay. So that is what I'm looking on the daily. I'm seeing a bit of a pause here, but it's kind of a descending channel. After a descending channel, I expect the price to actually go up. So if we can get that nice signature, if we can get the nice momentum indication like this, then I would look for buy setups, because then we would continue. We would basically continue with this option right here, right? That would be the case. So that's it for silver. Okay, we have NASDAQ 100, sure. Let's start with the 1 hour. That's how I like to do it. So the 1 hour is gonna be pausing a little bit. So we were in a very, very nice, very, very clean uptrend until this point, okay? Very, very nice, strong uptrend. Big leg up right here. Big leg up right here as well. But now we're starting to see some warning signs. Starting to see a bit of flat and range-bound price actions. So I would need to see momentum kick back in. For me, I consider this as currently being a bit range-bound, so I would look for a push-up. 4-hour looks better. The 4-hour still has that nice, strong bullish momentum. And then a bit of a pause, but that is not unusual. So my bias is for this to definitely continue to the upside. Okay, definitely. Just fix this light. Okay, that's a bit better. And the daily is in an uptrend as well. So we had a big push. This was looking really clean right here. Very, very clean price action, very bullish price action. But then a bit of selling pressure. Fortunately, now the bullish pressure is continuing. We're breaking the highs, closed above it, clean close. So I would not be surprised if this does continue like this. Okay. So a bullish scenario on the daily, bullish scenario on the 4-hour, 1-hour, pausing a little bit, but I think we're gonna, well, the probabilities are telling me that this is gonna continue up. Okay, can gold give a pullback to 2360? Sure, let's see. So 2360. Well, the technicals are kind of messy right now. So we had a bullish leg right here, but then we paused a little bit. Then we clearly had news. This was clearly NFP, okay? And now we are not really committing, printing a bit of a wick. So this is telling me that we're going to range around, especially so if this candle closes with a huge wick, okay? If that happens, I would definitely expect the price to range around. So I would definitely expect something like this to happen. And in that case, I think we would retest 2360, okay? So my bias for gold, at least on the 1-hour, is that we continue with this range bound structure a little bit, okay? That is what I can spot on gold. GBP CAD, yeah, sure. GBP CAD. Wow, this looks good. Nice push up on the 1-hour. Very nice push up on the 1-hour. So that looks very nice. 4-hour looks good as well. I like this leg. And I like this leg of momentum as well. So this is looking very interesting for a nice bullish scenario. Daily, looks okay. Not the best because overall it's kind of stuck in this range, but I have to say the 1-hour for me is bullish. 4-hour is bullish as well. So I would be trading on the 1-hour. I'm not trading this pair, but if I was, I would be on the 1-hour and I would be looking for buys. For example, I have two continuation setups. So the first one is a simple flag like this, okay? And a second one is an impulse up, 1 candle pullback or a 2 candle pullback, break of the high with momentum, and then we retest the high like this. Okay. Gabriel. Hey Marco, I got a question. Since you trade with a small stop loss, if I have a strategy with a tight take profit, 20 to 25 pips, how can I set a reasonable stop loss without risking being stopped out? So that all depends on your backtesting. I can tell you my stop loss size. So I use a general stop loss for the current market volatility. That is 10 pips for the dollar pairs, okay? And 10 pips look like this. So I use a 10 pip stop loss on the dollar pairs. JPY pairs, I took a trade this week, so I can show you. I use 12 pips, okay? So 12 pips for JPY, and then for the pound, it's here, see on the list. For the pound, I tend to use 15 pips. So let's say I was looking at at a trade right here, I would go with 15 pips, okay, or maybe even a 20 pip stop loss. So it all depends on how the stop loss visually looks like. I tried ATR, so average true range. I tried some other tactics as well, but in the end, I came to the conclusion in my backtesting that I am most profitable when I visually assess the volatility and visually set the stop loss. Okay, but of course, I have backtested last 3 years of price action with a 10 pip stop loss and with a 12 pip stop loss on the JPY pairs. It works, right? So you need to backtest a big sample size with a fixed predetermined stop loss, and then you will see, does it work? Is it too small? Is it too big? Meaning, are you leaving a lot of profit on the table, or is it just good enough? So it's all about backtesting, and it's all about with a tight take profit of 20 to 25 pips, I think a 10 pip stop loss would work, depending on which time frames you're looking at. Okay, so yeah, definitely go backtest 10 pips. Definitely backtest a 10 pip stop loss. Any possible re-entry in silver? Let's see. So silver, I'm not sure if you're a buyer in this market, because for me, this is a bit indecisive, I have to say. It's pretty flat. We had the NFP candle, huge wick on the bottom, now breaking higher, but again, currently printing a wick. So that is not a good sign. That is actually a warning sign. So for me, I classify this as being in a bit of a range on the 1 hour. 4 hour looks bullish, as I said. So yeah, there is a flag here actually. Let me show you. First high, first low, second high, second low, and the blue candle would be the entry candle. So if you're looking for entries, for bullish entries on silver, to be honest, I would look for more momentum. All right, I would look for a big momentum push up and then a nice clean flag formation. That would be on my radar for silver. Hello, more JM. Let's check gold. Which would be the low for today? Okay, let's do gold again. So gold 23.42. We're going even lower. Okay. What do I think? Well, I think it all depends on this candle. Okay. When I backtest news candles, because I do look at news candles just visually, so technically, I do not look at the news results. I do not look at specific news events, but I know what happens most of the time after a news candle. Let me give you an example. So what I have found is when you get a big news candle, such as this one, this is definitely a big one. How do I know it's a big one? Just visual assessment. Okay, you can draw a line, compare it with all the other candles, and it is massive. There's a lot of volatility going into this candle. So if the next candle or the next couple of candles print bullish like this, then I expect the price to start an uptrend. In most cases, it will start a nice uptrend, at least what I have found. If the next couple of candles are very weak and sort of start retracing and not really moving anywhere, then that is a sign of a range-bound market, right? So it all depends on this current candle. What is it doing now? It is printing bullish. It's looking pretty good. So if it continues doing this, I would say my bias is for this to go up. If at the close of this candle, so 26 more minutes, if at the close of this candle, this does retrace, print a big wick like this, well, then I would expect a range between the high and the low, basically this high and this low, possibly retesting these lower levels. Again, when the price is ranging, it usually goes from the extremes, from one extreme to another extreme, right? So it goes from the top of the range to the bottom, from the bottom back to the top, from the top to the bottom, right? You get my point. So retesting the lower levels would be possible in that scenario. Nash, gold, please check gold. Gold. Yeah, so just did gold. 704 woman. Do see USD CHF as bullish. Okay, USD CHF. 1 hour, a bit bearish, but kind of retracing. Yeah, Bitcoin. Let's do Bitcoin. We love Bitcoin. Kind of bearish, but more of descending, like in a descending structure. Okay, and that is telling me that the price actually maybe wants to go up, because what I have found mainly on Forex pairs, okay, you can definitely see it happen a lot on Forex pairs, is when you get a descending, price will soon start an uptrend. Or when you get an ascending channel, price will soon start a downtrend. How do I distinguish a descending channel and a downtrend? Well, a descending channel looks like this. A downtrend looks like this. So it's all about in the size of the breaks of the low. See, large momentum here, large momentum here as well. Here, look, just very, very low amount of momentum. So that is the biggest difference between the two. In this scenario, what is happening when we're breaking the major lows? Broke this one, retraced. Broke this one, retraced. Broke the low, retraced. So yeah, I'm more seeing a descending channel right here in this price action. 4 hour looks bearish, but again, I don't like the wicks. I don't like this price action. It's not looking clean. It's not looking sustained. The daily is kind of printing a V. It definitely printed a V reversal here. So usually what happens after a V, you get a bit of a range and you get a push up. It's basically the same as a cup and handle. It is very similar to head and shoulders, right? Because if you compare it, V, range, we have cup, handle, then you add, let's say, a shoulder, you have left shoulder, head, right shoulder. That would be the inverse head and shoulders. I'm not sure how to flip the charts. Is it Alt-I or Shift-I? Okay, so yeah, see, this is head and shoulders, and this is inverse head and shoulders. So it's all the same thing, different name, like ICT. His concepts are being used everywhere, but he just took them, changed the name, did some great marketing. So it's all the same with a different name. Okay. Thanks for the hints. Yeah, no worries. No worries. Constant GBP JPY. Sure. Let's do GBP JPY. OANDA. If you're wondering which data provider is the best, OANDA. Okay. FXCM is good, but OANDA is even more reliable, I would say, on TradingView. This looks nice. This doesn't look so bad, actually, on the 1 hour. What I'm seeing is a big uptrend, definite uptrend, and then a descending channel here. Okay, push up. So I would not be surprised if this was just a pause before the uptrend continues. Again, we're seeing weakness or strength on all of the JPY pairs, meaning the Japanese yen is losing a lot of strength. Japanese yen is getting weaker and weaker every week, which is good because we like trends. Okay, we definitely like trends. We make the most money in trending market conditions. Yes, you can play liquidity sweeps and rangeable market conditions. I trade liquidity sweeps, like selling the top of the range, buying the bottom of the range. But I love my trending entries. I make more percentage with the trending entries because you just get in, It's a low win rate, but when you win 1 to 5, 1 to 8, 1 to 10, maybe even 1 to 15. Okay, and that is very good. That's what we trade for, basically. So I like this price action. I like this push up, and I would be looking for buy setups. 4 hour, yeah, this is a flag, basically. So large, strong uptrend right here. And then you have a flag, first high, first low, second high, second low. Blue candle would be my entry candle. So this is what I trade, right? I would be in this trade. If I was trading this currency pair, this would be very, very high probability, especially with that really, really strong uptrend pushing the price up. So I would definitely be in buys right now. And this is a bullish scenario. Daily, whoa, daily is looking awesome. Daily is looking absolutely awesome. Very bullish. Very, very strong. This leg is really strong, really nice. So GBP, JPY, explosion to the upside. If this closes bullish, this current candle can close bullish with a nice clean close, then that would be awesome. Okay, Bitcoin. Let's start on the 1 hour. Whoa, Bitcoin is dropping a little bit. What is happening? I haven't been paying much attention to Bitcoin. Whoa, what the hell? Interesting. Okay, 1 hour chart, really bearish case. Okay, really, really bearish case. So I like this leg of bearish momentum. I would be a seller in this market. Again, I'm not trading this live. I'm only trading my 6 Forex pairs, but this does look interesting. And let's bump it up. 4 hour. Whoa, we're breaking some structures. Damn, haven't spotted this. 4 hour is dropping massively. This is a really nice downtrend, really strong. Look at the pullbacks. One way you can identify a weak downtrend and a strong downtrend is in the pullbacks. Let me tell you the difference. So just technically, a strong downtrend has small pullbacks, but a weak downtrend usually pulls back more like this, right? So you still have strong legs of bearish momentum, right? You still print momentum, but the pullbacks are kind of big. So the smaller the pullbacks, the more impulsive, the stronger the downtrend or uptrends are. And this is very strong. Daily, whoa, damn, I was looking at this level. Failed. Okay, it might not fail, but we're definitely pushing into it. So very interesting. Again, I was looking at this level right here. This was a major low. And I was looking at this high right here. If we broke the high, closed above it, I would expect the price to just skyrocket, maybe all the way to 100K, at least 90K. But now this is piercing lower. So that's not a good scenario. Depending on how this candle closes, this is the daily candle. If it closes with a big body, so not with a wick, but with a big body like this, then that is very bearish. If it closes with a wick, then we're going to have to see what will happen in the next week, right? Because it can just still be in range, right? It can still be pretty flat. And it can bounce back all the way to the top and just continue ranging. It can happen, definitely. So we're in a very crucial spot, very crucial. Depending on the candle close, depending on what happens next week, we shall see what's gonna prevail. If we get a big bearish candle, then I think it's time to drop very heavily. All right. So thank you for anyone who shouted out BTC first, because I didn't even spot this. I did not have my alarms. This is interesting. Anything on oil? Yeah, sure. Oil, 1 hour, flat. Very flat and corrective right here. Not seeing much. 4 hour, moving up overall. It's in an uptrend, but a corrective uptrend, so not looking very clean, to be honest. Daily is in an uptrend. We have the V. See, this is the V that I was talking about. V range push up. That's a formation. That's a pattern. Or again, cup, handle. Could you make a case for inverse head and shoulders? Not really. You're kind of missing the right shoulder. So yeah, but this is a bullish pattern, right? When you see this pattern, you can expect an uptrend in most cases. It's not a guarantee, because in trading everything is probabilities. No one knows what the markets will do. So in the next hour, no one can tell you if this will close bullish, if it will close bearish, or if it will stay the same. No one knows. But on a large sample size, we know when we see this pattern 100 times, okay? Let's say this pattern happens 100 times on oil in 1 year on the 1 hour chart or on the daily. Okay, it's not going to happen on the daily, but let's say it happens 100 times in 1 year on the 15-minute chart. 70% of the time, it's going to go up. And 30% of the time, it's either going to range around or it's going to drop. So you can build an edge around it, right? You can be a buyer, and then 70% of the time you'll make money, 30% of the time you'll lose money. But when you make money, make sure you have a 2-to-1 or a 3-to-1 risk to reward. When you lose money, you lose 1 hour. So the mathematics behind it work. So the daily on the US oil is in a bullish scenario for me. Okay, Euro NZD. We're going to do a couple more requests, and then I believe we're going to wrap it up for today. So Euro NZD starting from the 1 hour. Flat, 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 flat. Flat, flat, flat. I didn't want to do that. Euro NZD flat on the 1 hour. 4 hour is looking like it has some bearish legs overall in an uptrend. So this is just a pullback for me. So this looks kind of like a pattern with a push up and then a descending like this. Okay, which usually continues up. So I would not be surprised if this does continue up like this, start a nice uptrend. Daily, daily printing a V reversal. Why is everything printing a V reversal? That's weird. But basically, you know the story. V reversal, usually you get a range and you get a push up. Okay, NASDAQ, we already covered. Any recommendation of a trust broker? I think Trader Nick has a lot of recommendations in the description of this video, I'm sure. So definitely check out the description. I personally use IC Markets, but for US folks, I don't think IC Markets works. So definitely check out what Trader Nick has to offer. And yeah, I believe this wraps it up for today. Thank you guys for watching. We'll do the requests next week as well. So just save your request for next week. Well, I think you're muted, James.
Thank you for coming on today, Marco.
Yep, sure.
Yeah, I wanted to pop in really quickly because you touched on the broker thing for a second. We do have links to our recommended brokers in our description. And you can also find some stuff on brokers on our website, a1trading.com. So we've got useful broker information for you, both in the description and on our website. Marco, thank you again for coming on today and giving all that great analysis. We're going to run another really quick break here, and then we're going to be right back with Forex James, so don't go anywhere. Marco, we'll see you next week. And guys, again, one more time, we're going to run a really quick break, and then we'll be right back, so don't go anywhere.
Thank you very much. See you.
Hey guys, good afternoon or good morning, wherever you are in the world. How's everyone doing? Hope you're all doing well. So this is the silver position I've been in for quite some time now. I wasn't able to show it earlier, but yeah, it's been since the 18th of June. So coming up on a month now. We're finally seeing some profit. We spent quite a bit of time in drawdown around here. But yeah, I think everyone should be very familiar on the gold and silver aspect of things, you know, the price action and the forecast and things like that. So if we've got the fib from the sort of previous swing low to when we reach these highs at 32.5, we have this level of sort of previous structure. So it's previous high got broken out and sort of retested here now as supports. We've also got this fib level that again directly lines up with this previous resistance. So technically, really, really nice trade. So yeah, we're just sort of sat in this now. NFP really helped with this. But yeah, we're just sitting on our hands with this one and holding it until our take profit at 35.8-ish. Lee, good to see you. Emiant, I think that's your name. Don't want to mess that up, sorry. Good stuff. Some of you may have seen I got access to my funded account. I got my certificate through last night. Got access to the account, I think it was half an hour before NFP. So traded some after NFP moves, up 0.8% on the account already. So in theory, I wouldn't have to trade again for the next 10 days, and I could make a withdrawal and take the money back that I invested, which is quite nice. But I want to show you the trade I took and why, really, because it was not really a super clear one in terms of, you know, looking at it on a face value thing. It wasn't super clear. So obviously this candle now is bullish. This is obviously a real-time chart. However, at the time, we were starting to see some rejection around this R1 level. So R1 is a pivot point. This also lined up really well with this 200 moving average. We had a wick rejection to the upside. This move was obviously driven by NFP. Price opened below this pivot. So a short position was pretty obvious. And obviously, because this was driven by news, I wasn't looking to hold it for too long. So it was a very quick move. I think the actual result was only, it was 0.5%, so 0.5. So nothing crazy, but obviously for the first half an hour on a funded account, definitely not a bad result. So CAD JPY, yeah, we can take a look at that for sure. There we go. So I was trading the pound yen. Last night I put a position on due to the UK elections. The reaction was actually very limited on the pound, but yeah, that was quite a nice trade. Actually, NFP drove that one as well into some quite nice profit. So I actually quite like this. So I've been talking for a while about needing pullbacks on the yen pairs. Now, obviously, this isn't a huge pullback. This isn't anything groundbreaking. However, if you are looking to get in on smaller time frames, so for example, the hourly time frame, this looks quite healthy. And the reason being is we've got, hold on, let me pull up my trusty brush tool. We've got a really nice rejection to this downside here. The 200 moving average is pretty close now. It's, you know, we've closed this huge gap we have with this wick. So that looks good. Of course, the trend is super strong to the upside. So long positions are kind of like the only way to trade this at the moment. Going short is, you know, if anyone was trying to short this, I'm sure they would have had a very difficult time. But yeah, this looks pretty good. You know, we've also got this sort of small support level right here, but this is only the hourly time frame. So if we're looking at, you know, the still quite weak, and I still would like to see something a lot larger, potentially down to sort of this level here, and that would hopefully bring us into something like this where we'd meet this 200 moving average, and yeah, sort of just relax price a little bit. We've got a huge gap between our moving averages at the minute, which is sometimes a sign that we can see a pullback coming. However, again, this is the yen, so it would kind of take something to happen, more than likely an intervention to get that type of pullback. You've been long since June 28. Let's see where that is. So I assume around here. So that's, yeah, nice. Looks good. Yeah, just be very careful. Yesterday actually was a perfect time for an intervention with the US holiday, but for some reason we didn't see one, which is interesting. The last intervention was also over a US holiday. We also saw the COP report starting to lower short positions on the yen over that time frame, which was kind of a dead giveaway that an intervention was going to happen. So in terms of the reaction from NFP, I'm sure you guys have already seen this with the previous guys on the stream, so I won't go into it again too much, but we're still holding this sort of range, or I'm not really sure what this is called. It's some sort of flag pattern, I think. I don't really pay attention to that stuff, but it would be interesting to see how price reacts right here. Obviously, we are coming back to this sort of trend line, so yeah, we can see, but we also have a bank report here. So I only really show these on stream if there's something I think you guys can actually get value from. Now, I'm not going to read this. If you want to print screen it, feel free to and read it in your own time. But the points I want to look at, let me have a quick look. I can't remember where it was. Okay, yes, here. The Fed left its target range for the federal funds rate at 5.25 to 5.5 on the 12th of June for a 7th consecutive meeting. The median dot showed just one rate cut in 2024 instead of 3. So that's quite important. So there was, of course, 3 rate cuts being spoken about, and then it kind of got cut down to 2, and now it seems like there is just 1. And I tuned in earlier. I think Nick was talking about these cuts, and it's getting priced in for sort of September time, which again, that's not a certainty. There is no data to say it is definitely in September, but it's more than likely going to be towards the end of the year, so sort of September, November time. But yeah, if that's already getting priced in and it does happen, it's not likely we'll see much of a reaction, more of a continuation. But yeah, we'll see. It's kind of like the UK elections and the pound. It was very obvious Labour was going to win. That was already priced in, and we've not seen a huge reaction from that. It's not been a shock. So obviously, it wouldn't be a shock if the Fed do cut rates in September, because that's kind of consensus at the moment, or November as well. So let me take a look here. What do you mean you're confused about the next Fed? Still waiting for a pullback on the Australian yen. I mean, I've just spoke about the yen. I don't see any reason to start trading the yen really, unless you're on small time frames looking to take scalps. It's just because we're at such a high price. I think it's a little dangerous to start trying to get in now for a long-term play. Wheat is starting to show a little bit of bullish momentum, but again, like I was saying, I think I've already missed the cycle now. So I was looking to take this this trend here, and it seems like we're starting to come out of this now. So I think I might have to remove this from my watch list next week and move on, unfortunately, but that's one of those things. The USD NOK is, of course, something as well I've been looking at for quite some time now. So I'm looking to take a short position on here, just because the NOK is very undervalued. It's one of the most undervalued currencies at the moment, and it's expected to start gaining some strength sort of into 2025, especially when the Fed start to cut rates. So I'm looking at this trend line mainly, and of course, this sort of break and retest is ideal. That would be, in a perfect world, but I don't really see this actually happening. This is more just a rough plan. So realistically, I'm just looking for sort of a bearish close underneath this trend line, and that would then give me the signal to potentially enter a short position, something along these lines. Now, again, this is the weekly time frame, so no one wants to sit here for weeks and weeks and weeks for 1.8%. There's just no point when I could do that, you know, in a couple of days or even a day. So when taking large positions or long-term positions, I often scale up the risk to make it worthwhile. So it might be a 4 to 5% play for me. And that's just a personal move. That's something I do. I would never recommend anyone else to do that. But yeah, like I said, I don't want to sit in a trade for weeks and weeks and weeks for a very minimal return. The Australian New Zealand, let me just take a look at the chat for a sec. How it will affect gold. Well, if the Fed cut rates, generally speaking, that will be negative for the dollar. So we could expect gold bullish, silver bullish, and all the XXX USD pairs to be bullish. But of course, that also needs other things to be accounted for. So, for example, gold's been heavily driven by geopolitical problems, well, not problems, but geopolitical factors at the moment. We also have a lot of uncertainty in the markets with Trump and Biden. So we'll have to see how that plays out too. But yeah, generally speaking, gold looks very bullish, especially with cuts coming in the next couple of months. Moving averages are 50 and 200. So yeah, Australian New Zealand is really, really nice. It's probably one of my favorite pairs at the moment. The only sort of thing I'm looking at now is this weekly level of resistance. If we could break that, it would be a great sign. We could potentially head up to this sort of level around here, this previous weekly high at around 1.14. So somewhere along these lines here. Yeah, there's not really a clear place for a stop. I mean, this is obvious here, but that really hurts the risk to reward. But of course, this is weekly, so I wouldn't be trading this on the weekly anyway. But yeah, I think definitely bullish on the Australian New Zealand. It's just, I mean, I've been saying this for a while. I'm just looking for an entry. I can't seem to find one, or there doesn't seem to be one presented, I should say. So yeah, I'm just looking for some sort of pullback to maybe the 618 level, this 200 moving average sort of area, this level of previous resistance, and hopefully see it now turn into support. And this will present a great place to get in for a position. And then we could take that all the way up. But yeah, it's probably one of the most obvious at the moment. It's just, yeah, a little bit difficult to actually get into. New Zealand CAD looks really good. I quite like this. So we're seeing according to the moving averages, the RSI is actually just becoming overbought. So yeah, this looks very, very healthy. Let's check on the Edgefinder and see if there's anything to back this up. This is what I do. I quite like to look at the price action, technicals and things. And if something looks good, then I'll move over to Edgefinder. And if Edgefinder also agrees, and you know, there's also some other bits, whether it's, you know, a bank report that also agrees, then I'll look to take it. So unfortunately, it doesn't, which is one of those things. So I'm going to have to avoid this one because it's neutral, but it's hedging a little bit more on the bullish side than the bearish. So this is no go for me at the moment anyway. Things may change, but yeah, at the moment, not technically good, fundamentally not great. Gold is looking very juicy actually. Just because of my silver position here, I'm not too interested in gold. I don't really want to start adding too much into the commodities market. If we could see a pullback, I may enter with small risk because my silver position is risk-free. So I may enter with just 0.5% and just see how it goes. But yeah, it just depends where this pullback is, because we could see, we've broken obviously this previous, this level of resistance, we've broken out, obviously this was NFP. So it depends if we get this retracement from NFP and we can see a continuation, that would be a great sign to go long with a stop underneath these previous lows and a profit level at the sort of highs around here. So I think this would be the plan of action, and whether we get that or not is the question. So I'm actually going to set an alert here. For some reason, my alerts aren't working. Just give me 1 second. Very strange. Yeah, all right, whatever. But yeah, that would be my entry price for gold at the moment. Okay, there we go. So I'm long GJ till 207. Can you give your POV on this? Yeah, so I was long on GJ as well. I closed out this morning after NFP just to reduce my portfolio. But yeah, I was, let me draw it up. I entered long here. Yeah, around here. I didn't have a stop loss just for personal reasons. I don't always have stop losses. And then I also scaled in when I woke up this morning. I think I scaled in around here. Again, no stop loss. And then I closed out NFP around here. So overall, I gained roughly 1%, maybe slightly over 1%. But yeah, I just sort of sat through his drawdown. But again, I was asleep during this, so I didn't care too much. And the reason that I wasn't too bothered about using a stop is because if we look at this market overall, even if we saw a huge pullback to this 200 moving average, I would have just scaled in again. Because I'm treating the yen almost like an indices or an investment at the moment. It's more a case of I'm happy to sort of dollar cost average all the way up, which I haven't done. But if I was caught off guard with no stops and we had a huge pullback, I'd definitely be looking to keep adding in, especially with the pound with the elections. So yeah, it made sense. But as for now, let me just reread. So you're looking for 207, which I was actually looking at 208. So I think 207 is fine. So yeah, 208 looks like it could be realistic. You've just got to be very cautious again for interventions. I keep saying this, but it's very, very important because you could be, you could enter here, come up into huge profits. And if you aren't, managing your risk, you could get closed out break even or a loss. So yeah, with the yen pairs, it's very important to at least trail stop so you can lock in something if the MOF wants to play games. DXY, we've already covered the DXY, but essentially I'm looking at the bottom of this trend line now to see if we can break it or not. But yeah, I'm not really too much of a fan of the dollar at the moment. I mean, it's just ranging really. I mean, we've got higher low, higher high, higher low, higher high, higher low, and now we've created a lower high. So again, it depends on which direction you're looking. If you're looking at it this way, then yeah, it's kind of a typical uptrend. But if you're looking downwards on a sort of a larger time frame, we've got lower highs being printed. So obviously we've got high here, lower high, lower high, lower high. So yeah, not too happy with the dollar. It's not something I'm overly bothered about touching. More just waiting for the elections. I'm moving to other assets, mainly the sort of commodities markets and the Australian dollar are my kind of main watches. What were the effects of the election on the pound? Basically nothing. So Great Ape, the way the elections worked is we get the sort of expectations, so the sort of consensus, and Labour was flying those results. They were in the lead in a huge amount, one of the biggest amounts I've ever seen, actually. So it was pretty clear they were going to win. And it's been very clear that Labour was going to win for a long time. So it was kind of already in the markets, so it had been priced in. It wasn't a shock, so there was very little reaction. However, I do still expect it to positively impact the pound over some time. And when I say over some time, I mean over maybe the next month or so, while we see how they plan to execute manifestos and what their real plan of action is now they're in power. However, overall, I'm still a perma bear on the pound. I still hate it. I still hate this country, and I really think that it's overvalued, to be honest. So yeah, I'm still looking to go short on the pound for a huge position trade, but I'm not quite ready to execute on that at the moment. If I do, I'll be very public about it. I'll put it on Twitter, on Instagram and things. So you guys will know about that if I do decide to do that. You had a lot of expectations from the elections. Yeah, to be honest, I expected a little bit more of a reaction, but there was essentially nothing at all. let's just see what else there is. Dollar yen. This pullback looks quite nice. However, actually, I probably could have caught this. Met my strategy really well on the hourly time frame, so that wouldn't have been too bad. But again, you know, for the larger time frames, we still need to see a larger pullback to make a longer term trade valid. Which we're, you know, I don't want to keep repeating myself, but we won't really get a large pullback for just no reason. We do need to see an intervention. So next one is the Aussie dollar. This one looks really nice. In fact, this is probably my favorite pair at the moment to watch. So I'm looking to go long. You can see here, I'm not in anything yet. But actually there could be an entry presenting itself here. We've got a really nice level of resistance through here. So as you can see, resistance, we've broken out, and NFP came down and touched this level again. We may get another retest on this level with the current candle or the next candle. If we do, then I may look to just execute a long position and just take a stab in the dark. Well, not in the dark, that's the wrong way of saying that, but just take a stab at this. So my real entry, you know, in the perfect world, it would be here at this 50% pullback level. But I'm not sure we can get that, because I think this move we're seeing now is a correction of the initial NFP push. And then we may see the continuation of this uptrend. So if we take a look at the Edgefinder, I think AUD USD is one of the strongest, if not the strongest. So let's see. Okay, yeah, it's one of the strongest. So gold is the strongest. AUD USD is still looking very healthy though. It's got a score of 11. So we've got COT is very bullish, retail sentiment's bearish, seasonality, trend reading, inflation, services PMI, retail sales, unemployment. It looks really, really good. The only negative thing is GDP, but that should be fine. You closed EU shorts before the news. I bet you're happy about that. You would have been able to get out break even if you held. Oh, I assume you closed your shorts in a loss then. Yeah, I don't really hold short-term trades over news, to be honest. Long-term trades are fine for me, like silver, don't really care because, you know, it's taken on such a large time frame. NFP has very little effect on the overall market. It's not like NFP could stop me out unless it, you know, unless it really overshot. But yeah, very unlikely. So AUD USD looks great. I think I may execute this one today, actually, if everything lines up. So the H4 lines up. So this is the process when I'm looking to take a trade. It's technicals, Edgefinder, bank reports. I'm not specifically in that order. It's normally bank reports, then technicals, then Edgefinder, because I'll read the bank reports in bed at night or in the morning while I'm having a coffee. And then I will go down to the H1, and this is where I actually execute. So I like to see an H1 bullish candle close, and that's the entry signal for me to finally actually click the buy or sell button. In this case, the buy button. So for stops, I think I'll go very tight again because this isn't my ideal entry. So it'll be probably half risk, so maybe 1% or 0.5%, and we'll have a stop potentially down here. And the reason is because this allows price to come back down to my ideal entry point. And if that does happen, and again, we see a nice reaction, that will then allow me to scale in at my full risk. So maybe 2% total, and then ride this up. So that's how I would sort of go about this position. But yeah, we'll see. You know, we never know what will happen. What site are you using to read bank reports? I'll show you 1 second. Let me pull this up. So bank reports are inside the Discord. So we send them every day. We send every bank report, you know, every day of every working week. There's normally 10 to 15 bank reports, but yeah, you can't get them publicly. They're not accessible. There isn't a website you can just go and get them from. You have to be approved to be able to get access. What time frame should be looking for a pullback on gold? I trade the 4 hour. Well, if you trade the 4 hour and you want to pull back, then you need to pull back on the 4 hour. Don't start trying to force different time frames into your strategy, because then what happens is what might look great on the H1 or the daily or whatever might not look good on the H4. So for example, if you open a trade, if you take a trade on the H4, you wouldn't then go and manage it on the 5 minutes, or you wouldn't then go and manage it on the weekly time frame. You would still manage it relatively according to the H4, because that was your execution point and that's where your analysis is. Again, that's quite generally speaking. I mean, you can trail stops underneath weekly candles and things. There are other ways to do that, but yeah, just speaking on in general terms. You don't need a site to get currency strength. So what you can do is a little a little method in TradingView that I do. So what you do is open the currency chart. So whether it's DXY or whatever it may be, put this onto a line chart, remove all your indicators and whatever else you might have on there. Go to wherever you keep your currencies, right click and then compare. And what this does is it creates a strength chart for you, or a currency chart, and this way you can then gauge before you get into the market what currency is doing the best, what's the weakest, and you can also change it through time frames. So this is how I do it, really. It's one of the best ways, in my opinion. There are also sites you can just search in currency strength meter. There are websites that do it as well for free. Do you trade crosses? Yes, I trade crosses. Euro AUD. Last thing I think I'll go over because my time is up, I think. So Australian dollar. I've actually removed my old positions, but yeah, I trade everything that moves. If there's money to be made, I'll be there. So yeah, guys, I think my time is up. I'm not sure if someone's going to come in and tell me to leave, or if I should just leave. Pound dollar. Yeah, guys, next guest, I'm sure we'll take some of your requests. So take a look. Hey, James, you're muted.
I keep forgetting to do that. I hate telling people that their time is up because I know that you guys want to keep going, and we really appreciate you guys giving us all this analysis. But we do have our final guest coming on the show today. We've got Nick Phillips up. So, James, thank you very much for today. We will see you back next week, I'm sure. Guys, we're going to run one more quick break, and then we will be right back with Nick Phillips. But, James, thank you very much for coming on today.
Thank you. Thank you, chat. Have a good day. Thank you, A1. I'll talk to you all later.
Man, Frank, we finally made it down to the beach this year. What do you think?
I think this is a really great setup.
No, Frank, we're at the beach. We came all the way down here. What are you doing on your phone?
But check this out. It's a really great setup on gold right here.
Our Edgefinder summer sale is now live. Get 50% off all of our tools like commitment of traders data, economic data, and our top setups algorithm for 50+% off using the link being dropped in the chat right now or the description down below. Don't miss it. This is our biggest sale of the entire year.
Hey, what is going on, everybody? Welcome to this segment of the A1 Trading Show. Happy Friday, happy NFP day. Interesting numbers out of NFP today. A bit of mixed sentiment. I'm not really sure if you guys have already gone over this on the stream this morning, but we'll touch on this real quick. We had non-farm payrolls. Let's see if we still have this here on the Reuters. We do. Okay, so we had non-farm payrolls come out above the forecasted figure of 190, had it drop at 206, but that was inside the high and low of the bank range. And we had a revision from last time, bringing previous numbers down from 272 to 218. So sort of warm, sort of cool. It's kind of a flat on the NFP figures. And then the big number today was the unemployment rate of 4.1%. It didn't surprise the high of the bank range figures, but it is above that dot plot projection for year end for the Fed. So the Fed has projected this year to be at 4.0 for the remainder of the year, and we still have about 5 months left in the year, 6 months if you look at how many projections we still have for the rest of 2024. So half a year, and we're above their year-end projections on unemployment rate. Next year's year-end projections are 4.2%. I mean, it's not looking good on the unemployment side of things. The Doxy has reacted relatively interestingly. We went live this morning and traded it. By traded it, I mean we sat on our hands because the data was so mixed, because we got this higher than expected NFP number, but also a higher than expected unemployment rate. It's sort of like, what do you do with this? How do you, we can't find a definable edge for the way that we scalp this data. So, it really no trade for us this morning. However, I do think that between these two numbers, between the NFP number and the unemployment rate is sort of the most important this morning. Not that NFP doesn't matter, not that it's not factoring into what's currently being priced, but the unemployment rate, I think, is what's ultimately going to end up stealing the show moving into early next week. I don't know if it's going to affect today. Today's an interesting day in the markets because it is the day after July 4th. So, as far as how does that come into play, how does that affect the pricing of the dollar, for instance? It could be ahead of the data. I basically gave my guys a heads up, like, hey, July 4th was yesterday. Today's NFP, maybe the markets weren't necessarily expecting the cooling ISM numbers that we got this week and the cooling unemployment that we got on Wednesday. We might not see reactions the way that we would expect today. So, Russ, how come USD JPY went up by 100 pips? It's anybody's guess as far as the numbers are concerned today. We had mixed sentiment. This was above the forecast, inside the range, below the previous. So a little bit like cooling based on previous numbers, but hotter than expected, and a much higher number than not much, but a higher number than what the Feds would like to see out of the market for unemployment right now. You would think that the dollar weakness would be in play. And I personally, I stand by what I told my guys this morning. I don't trust this dollar strength. I'm not willing to trade the dollar higher on this data. I actually, was telling my guys up in here, I don't trust dollar strength. We got a little bit of a pullback here on the, shorter time frames. This is how we trade it. We scalp this stuff, on the lower time frames. On the future side of things, some of my guys still trade Forex, I think, but I still don't trust this dollar strength. And we're at it looks like a key level that I have here marked up. This previous resistance support area at 105, right at 105. For the rest of the day, I don't know if we're going to see price break above this area. I would expect one of two things. One, we're going to fall from here. That's one of my two expectations. The other expectation is that we do something like this. We fall back into here and we fall back into this area and we just consolidate. This is I think the most likely, due to the nature of the mixed data, due to the fact that this is the Friday after July 4th. It's, I don't see us being able to push past this 105 level very much. Could it happen? Absolutely. Do I think the odds are there for it? No. And I think with all the cooling data that we've had out of the US this week, the much more likely scenario between popping up above this level and dropping down is further downside in the dollar today. But the highest probability scenario, I think, is we're going to maybe fall back into this level and hang out here and consolidate sort of in this little range that we had coming into the US data. All of London sort of stayed in here. And then even for the first, I want to say, yeah, about hour and a half after the data, we hung out in this area. So, you know, maybe a little bit of a bull trap this morning for the technical only guys who don't pay attention to fundamentals. Other than that, I really can't see a reason for dollar upside this morning. There's really nothing that makes that much sense to me. Let me see. JPY is weak, bro. Now, the pound going into this morning was the strongest currency, so it has significantly fallen back. Which the pound this morning being as strong as it was, or not the pound, sorry, the yen. The yen this morning was the strongest currency that we had. Let's see if we can solo this, or at least clean some of these out real quick. So yeah, so going into the data, the yen was the strongest. We were, you know, if you look here at just the relative currency strength, we were all the way up here with the yen, which is the, I believe, still the highest of all the currencies this morning. Oh, no, pound, for whatever reason, the pound is just continuing to be an upside move. You know, you get downside dollar, pound goes up. You get upside dollar, pound goes up. You get risk off sentiment, pound goes up. You get risk on sentiment, pound goes up. The pound is just, it doesn't seem to care what's going on with the rest of the market. It is just ripping to the upside. Yeah, Lee said, my sentiments exactly on what you said about market reaction to NFP and it being the day after July 4th. I think it's tough to identify, which is why, you know, I basically told my guys that unless we get a massive surprise in one direction or the other today, we're not going to trade this. We ended up getting mixed data, which is definitely a no-go for us. But even with a massive surprise, my outlook was, I'm going to be hesitant. I'm going to reduce risk. I'm going to go in this a little bit smaller because we just don't know how the day after July 4th volume is going to play into whatever the market is doing. So again, my expectation for the rest of the day, I didn't expect this big leg up. I don't really know what caused this at 9:45. I don't think there was anything really fundamentally that caused it. We still haven't closed above this initial spike area from the data drop. So again, my expectation is we're going to hang out here and just play around on the Doxy. Nick, are you a scalper? Yes, I am. Nick, missed a few days of your videos. Oh, that's a different Nick. Let's see. Someone wants me to touch on NAS 100. All right, let's go. Let's go check it out. Before I go to NAS, I do want to touch on OD. Again, my idea with the OD is basically the antithesis to the dollar. I'm expecting a little bit of one of two things. One, we're going to continue to push to the upside, or two, we're going to come in here and we're going to hang out in this range from pre-New York session. So, boom, boom. Maybe I overshot this drawing here. Yeah, my expectation for OD is I would be surprised if Australian dollar continued to sell off today and USD continued to buy up today. I would be very surprised. My expectation for the day is consolidation, which, you know, it's the same thing with the Doxy. We had this big spike here. Yeah, we've pulled up and closed up into these areas on the 15-minute, but it's still just a sideways market. It really hasn't identified a solid direction. So same thing on the OD. It's big spike down, spike up, spike down. I think we're going to spike up, maybe spike down, spike up, spike down, spike up. I think it's just going to be a consolidation today. I see no reason for odd to continue to sell off for the rest of the day. So consolidation, idea number one, or that doxy strength, or sorry, the doxy weakness is going to come into play. Dollar weakness is maybe come into play today. I don't know about the volume. If it does, we're going to see odd rip to the upside a little bit. NAS. Someone wanted me to touch on NAS. I'm gonna pull up NQ1. Hopefully you guys are okay with the futures, E-mini futures version of the chart. I can show you how this is exactly the same thing as NAS 100. Boom, same chart. NAS 100 via OANDA, or the NQ1 via the Chicago Mercantile Exchange. So this reaction out of NAS makes sense to me. This is theoretically what I expect out of odd. This is my expectation for the odd, is to almost mirror this, even if it's maybe a little bit slower today. Could I be wrong? Absolutely. But I expect the odd to do a little bit more of a climb back up here. That is, if doxy weakness continues to show up here at these highs. If we get a fall off here out of the doxy, I think the odd's going to start to mirror the NQ a little bit today. Could be wrong. Absolutely could be wrong. Totally open to being wrong, and not willing enough to put any money behind this idea. I'm not getting involved today because it is the day after July 4th and we had mixed data. I'm just going to sit on my hands. But this result out of the NQ makes a lot of sense to me today. We had higher unemployment, which is not necessarily a good thing for the dollar. Definitely not a good thing for the dollar. And not that there's a super strong correlation between the dollar and NQ, but the way that I tend to trade these events is two different scenarios: an expansionary scenario versus a contractionary scenario. And when I'm looking at a contractionary scenario, a scenario in which the U.S. economy is contracting to some degree, not necessarily on the growth side of things, but on a print like today with jobs and contractionary labor market, I am looking for gold and equity upside. And so we got mostly a contractionary scenario today out of the data, and we ended up getting equity upside. And I believe, I haven't looked at this yet, but I believe gold is to the upside. Gold is also to the upside. So the best plays today, if you were going to trade the mixed data, which we weren't and don't, would have been gold and equity upside. US 30, please. All right, I'll check out US 30. I have sort of a hate-hate relationship with US 30. I think, yeah, US 30 just does whatever it wants to do at all times. I have a chart here where I tend to follow all the equities across the board at the same time, and US 30, SPX or S&P 500 and NAS 100 will, I think I said S&P 500. I might have said S&P 100 just then. I don't know. But S&P 500 and NAS 100 tend to have a little bit more of a correlation than US 30. US 30 years prior had a bit of a stronger correlation to NAS and S&P, but over the last like year and a half to 2 years, I think at least the last year, it has been just doing whatever it wants to do. So I don't even pay attention to US 30. And fundamentally, I couldn't really tell you why it's doing what it's doing. But if we look at things from a technical standpoint, let's just mark off some levels here. Basic support and resistance is sort of the way I approach, technical analysis. I don't get overly complicated with it. Price established a bit of resistance here in this level, pushed down, tried to push up into these levels, got rejected, tried to push up again, rejected. 1 tap, 2 tap, 3 taps, 4 taps with massive rejections each time out of this area. A falling off makes sense here from a technical standpoint. We're breaking out below these lows. If this 1 hour candlestick can close below this, again, on a technical only basis. No fundamental reason for this. I think, you know, targeting this area of 39145 could be a decent little play. But again, it's Friday, the day after July 4th, NFP day. NFP day with data that should theoretically be pushing this a little bit higher than what it is, if not pushing it higher, consolidating. So I probably, you know, personally not going to put any capital behind that move at all, especially because this is counter to what I would expect out of this asset based on the data that we got today. And I tend to not trade against data. If we have a day like today where we get economic data that hits the market, and there's really no reason for any kind of downside in equities based on this data, I'm not gonna, even if it's technically going there, I'm not putting my money at risk for that. Just because the technicals are heading to the downside a little bit does not mean I'm interested in it. If anything, I mean, you're really not getting much of a setup for bullish price action yet on lower time frames. But I certainly wouldn't be selling this. Again, it could continue further south. It's surprising that it's gone south at all for me, especially when you're looking at something like the NQ, which, you know, had this initial spike to the upside, pulled down, found some support at the bottom of this range that it was trading in prior to the data, and then ended up pushing to the upside with that New York Stock Exchange volume that came in. This makes way more sense to me than anything US 30 is doing. All right, Amit asked me for GBP USD. Again, I'm going to expose you guys to something here. Oh, that's not what I want. Let's see. Give me 1 second. Okay. Okay, so if you look at 6B1, that is the futures, US futures equivalent of pound USD, 6B1, and we'll go click pound USD. Boom, same exact chart. So 6B1, let's look at pound. I mentioned this earlier, the pound is just rallying up no matter what. Again, risk on, risk off. Good US data, bad US data, it doesn't matter. Pound is just headed to the upside for whatever reason, I don't know. Now, continued pound upside this morning, when we're talking about pound USD, which is all the pound futures are, it makes sense to me. Buying into the pound in these areas could totally work for a quick scalp. If you guys are swinging, I'm not interested in swinging pound to the upside, and that is because fundamentally I don't see a reason for this strength. There is absolutely zero reason for the pound to be going to the upside right now, in my opinion. I think possibly on a technical outlook, we're going to see it tap into some of these areas and possibly fall off to the downside. That would be my expectation for the pound. I don't think we're going to be able to push. Let's go to pound USD for my Forex guys. I don't think we're going to be able to push above, really much above these 1.28 levels. Possibly 129, but I don't see it being able to jump up above these areas of resistance here. I think we're going to see the market realizing it's overvaluing the pound and sell it off. The only thing that maybe could continue to push this higher would be a significant weakening out of the US dollar. But the pound overall is strong. If we look at GBP USD or the pound strength currency just in general, it's one of the strongest currencies over the beginning of June, I believe, pretty much the entire month of June. It's kind of hanging out right here in the middle, but it's stronger than I would have expected it to be. I would expect pound to be hanging out down here, not necessarily with the yen, but below the euro and the NZD. It's much stronger than I would expect out of the pound right now. So for me personally, again, I'm not trading pound unless we get data. But even with the data, I'm a little hesitant to. If we get significant weakening out of pound data, I'll take a quick scalp to the downside. But the pound has just been rallying to the upside for really no reason, in my opinion. All right, let's see here. Gold, please. Strong fundamentals behind it. So, how do you trade exotics? Your personal strategy. I don't trade exotics. So, I used to trade Forex. I traded Forex for 6.5 years, actually 7 years. And just this year, with everything that went on with the Forex prop firm space in the last year, and then sort of not because the way I scalp, there's no real good Forex brokers that offer good pricing for, per trade for me. I moved to futures. The pricing is much better, spreads much better, commissions are much better. So I pretty much only trade US pairs because there's not that there's no, but there's very little volume in the cross pairs when it comes to the futures market. So kind of a little bit of give and take here. A little bit of give and take with trading futures. As a US trader, I get regulation. I get the security of being in a regulated market, which, I've had bad experiences with Forex brokers, and I won't get into that too much on the stream. But if you know, some of the Forex broker stuff unregulated can be a little shysty. So for the long-term health of my trading, I decided to switch over to futures. Now, I got security. I get to be part of what is classified as a gentleman's market as opposed to the wild west of Forex. I get to be involved over here in a much more professional arena. However, I have to give up being able to trade cross pairs. You have some cross pairs here. Let me pull up the rest of the US pairs. So Euro futures, Euro USD, that's all this is. The open interest volume is 641,000, and the volume is clearing at 212,000. Whereas if you go to, even all right, so we'll go pound futures again, 104,000. Australian dollar futures, 125,000. So this is a representation of the volume in the market. Now let's get rid of G10, which pulls up the major currencies. It's all the major currencies against the US dollar. We'll get rid of this. So now you're just looking at cross pairs. The highest open interest is 27,000 with the volume being 1,500. And if I pull this up, let's go Euro pound. So this is Euro GBP. I got to look at the symbol here if it'll pull up. I believe it's RP something, but I want to pull it up properly. RP U4. So we'll pull up RP. Euro pound futures, we'll just pull up the one. The volume is much different. And if we pull up the most, this is just a very ugly chart compared to even, Australian dollar futures. Same time frame, candlesticks are cleaner. It's just not what you want to be trading. So I tend to not trade any of the cross pairs anymore. And if we go to the most recent contract, which is RPU 2024, same kind of volume situation, but this is the best cross pair that you have. If you look at any of the other cross pairs, it gets worse. Let's go look at something like, significant drop off here. Pound Swiss. What is that? PF, it looks like, or PSF. Give me a second here. PSF U4. You guys see what I see? Terrible. No way to trade this. Absolutely zero way to trade this. What broker do you use for futures? Yes, so I use Tradeovate through TopStep. I don't have like an affiliate link or anything for you guys. Just, go to topstep.com. You can sign. It's a prop firm, but I use Tradeovate through them. And yeah, Tradeovate is a great platform. I like it. TopStep does have TopStep X, which is their. I don't exactly know how the broker side of that works because I don't use TopStep X. It's their own proprietary tech. It's probably a great deal. I started with Tradeovate. I like Tradeovate. The back end side of my business is based on Tradeovate now, so I was sticking with Tradeovate. But futures is a much smoother market, a much smoother trading experience, and this is coming from somebody who traded Forex only for 7 years. Making that switch. I didn't even make that switch immediately. What I did was I transitioned and I told myself as I was making the switch that I'm just adding futures in. I'm adding futures into my portfolio. I'm gonna, it's a little scary to just switch markets, especially when you've been involved in one market for almost a decade. It can be intimidating. So when I started to explore futures, I didn't even initially switch. I just added futures into my portfolio. But the more I traded futures, the less I wanted to trade Forex because it's almost the exact same thing. You got to get used to a little bit different terminology as far as like ticks or pips are now ticks and points. So a little bit different calculations. Your lots are no longer lots, they're contracts. So it's just a little bit of an adjustment. But there's some good guys on YouTube that they go into trading futures and the education from Forex to futures. Tanja, I think her name may be Tanya, but it's spelled Tanja. She has a Forex to futures YouTube video. Cammy Capital, Cammy Capital. He did a couple Forex to futures videos. Those kind of things. And I think TopStep even has some Forex to futures videos. But it's a very smooth transition. I highly recommend it. Let's see, what time is it? 10:45. All right. Does anybody else? Somebody said gold. All right. Let's see. Let's touch on gold. I mean, gold is just a beast in and of itself. There's a lot of reasons to be involved in the upside in gold, and and that's on a macro side of things, like just a larger scale. I was actually just reading something from Adam on Forex Live. The secular case for gold is that Russia, China, India, and the Middle East are buying in increasing amounts. The gold rally stalled after data revealed that Chinese official gold buying paused in May. There's also some mania in gold in Chinese retail circles that argues for caution. However, the gold market could be getting a second leg, at least a short-term one, due to political and economic uncertainty. This sentence right here would be my case for getting involved in gold long-term buys, but maybe a case for me to start looking at gold scalping throughout the day to the upside. We have the French elections. We have a ton of uncertainty in the U.S. U.S. economics data has taken a turn lower. Like, these are all very good reasons for me to want to be involved in the gold market. I tend to stay out except in times of geopolitical tensions, and most of the time the safest bet for me on gold is times of war, when a new war pops off. This right here, this just came straight from Forex Live, but I have Financial Juice. I believe there's a free version of Financial Juice that gives a lot of stuff. You can set up your own news terminal where you select certain outlets that you want to populate into your Financial Juice feed. And so for me, I have certain ones that come through, Forex Live being one that I like to read through for just various pieces of data, but I like to read a lot of their articles, a lot of their posts, I guess I could say. Where is that? Where is the, why is that resetting to like 3 days ago? Okay, here we go. So like this, Rachel Reeves becomes Britain's first female chancellor. I don't really care about that. That doesn't necessarily have anything to do with me. JPY or GBP JPY, again, I don't really care because I'm not trading pound yen, so I'm not going to pay attention to that. But something like this, the gold market may have found a second leg. That's important for me. I want to read through this and see what they're saying. Okay, all of these data points make sense to me. This is the other thing, is you don't just want to take something and run with it just because the analyst said it. You want to make sure that you sort of take what's being said and you put it up against what you know about the market. Well, for me, what I like to trade gold based on is geopolitical tensions. And I don't always trade it this way, but if we get certain economic data that points in the direction that I tend to trade, right, being contractionary data, we're getting contraction in the US economy. We should theoretically see some upside in gold. So we're getting weakening data. We have geopolitical uncertainty in the US, geopolitical uncertainty in France. We do have a massive war going on right now. It's not being talked about in this article, but that's also possibly playing into it. I didn't understand or didn't know and can't necessarily verify this piece of information, but it is good to hear it. Russia, China, India, and the Middle East buying increasing amounts of gold. Like all of these things come together to kind of form a really good idea for me that, hey, maybe I should, as early as next week, be looking at personally scalping gold during US session. It's a case for me to want to get involved. And the way that I would scalp it is simply based on support and resistance areas. I try not to overcomplicate my trading. If I'm just scalping without an economic data catalyst, then I'm going to set levels. And I want to see price reacting to these levels. So price comes down in here on the 2 minute, and then I drop down to the 5 second, or I also monitor the 15 second. You can see on these charts, I monitor the 5 second, 15 second, and then I'll change this one around to 1, 2, 3, 5 minutes. I kind of use this as like a floating one. But if I can start to see price coming down maybe into this support zone and giving me some nice structure to pull back to the upside, it tries to push down, fails a few times, gives some nice volume to the upside, I'll get in with stops just outside of this. And if I get stopped out, I get stopped out. I'm not over leveraging, so it's fine. I'll try another stab if we get the right price action in this area. And again, you gotta have very strict rules when you're scalping. You don't want to be over trading. Give yourself, a max 3 losses on the day, or 3 losses in a row, depending on how things are going for you. But that's how I would be approaching gold moving forward personally. Again, I'm not a swing trader. I really don't even hold things for the day. I like to get in on little moves off of major areas. I would also take something like a break above a major area, a break and retest. Theoretically, I'm not doing this today, but let's just say theoretically on Monday or Tuesday, price breaks above this area on the 1 or 2 minute, pulls back in, shows me some rejection on the 1 or 2 minute, and on the 5 second gives me good structure. I'll get in for a quick scalp. And with futures, my cost of trading is so low that I can afford to scalp. That was, again, a big reason why I left Forex, is because prices per trade was kind of tough. All right, guys. If you guys have any more questions for me, feel free to send them through the chat. If not, if I don't see anything come through in the next minute or so, I'm going to go ahead and call it. I believe I'm the last guest for today. If you guys want to, if you want to connect with me, follow me on Instagram. My Instagram is @officialnickphillips. I drop a ton of stuff on there, fundamentals, coming from the Forex trading world, there's a lot of traders that don't pay attention to fundamentals at all. So you may hear me ragging on the technical only traders from time to time. But all right, guys, I'm not seeing anything else come through. So I hope you guys have a great rest of your trading day. Stay safe, protect yourself. Don't over leverage. It's Friday. It's July 5th, the day after July 4th. There's no reason to be trying to, go all in on anything, any day, but especially not today. All right, guys, have a good one.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe and